Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be going through certain practical problems of how to solve a bank reconciliation statement when you have a favorable balance and when you have an unfavorable balance practical problem. So the first problem that we'll be solving will be a favorable balance problem. The problem has been already mentioned here. Let's just take a look at it. So the problem which has been mentioned here goes like this. We have balance as per cash book, which is 35,750. A favorable balance which has been mentioned in the cash book. There are certain parameters that has been already mentioned here. We'll be going through it one by one. Bank charges rupees 250. So there is a bank charge which has been already mentioned here. Let's go to the other transactions. Check deposited but not collected rupees 7,550. So there is a check deposited which has not been collected by the bank for an amount of 7,550. There are few more transactions. Let's go through it. Bill dishonored rupees 3,500. So there is a bill which was dishonored for rupees 3,500. Now we need to provide adjustments for all these three entries which have been mentioned here. How to solve this? So first, let's decide whether the favorable balance refers to the cash book or the pass book. Yes, so the balance which has been mentioned as 35,750 is a favorable balance as per cash book. That means cash book is the correct book and pass book is an incorrect book. So we have already mentioned in the sheet here the cash book and the pass book format, which says cash book being a positive book and pass book being the negative book. Let's put the addition and subtraction signs here so that it will be easy for us to define which transaction refers to which side of the board. So as you see, the debit side of the cash book has positive sign and the negative sign is on the credit side of the cash book. Similarly, the debit side of the passbook shows a negative sign and the credit side of the passbook shows positive sign. So, for example, if you have deposited any check in your cash book, the same thing will be reflecting on the credit side of the passbook. Both the sides are similar, so debit side of cash book is always equivalent to the credit side of the passbook, and vice versa, credit side of the cash book is always equivalent to the debit side of the passbook. So this is how we'll be solving the transactions. Let's go ahead and do the formatting of this specific situation. So as it is a favorable balance, that means this is a positive balance. The specimen has been mentioned here. You have particulars, you have amounts, you have all the transactions mentioned here. The specifications or the format has been already mentioned here. We have particulars, we have amounts, we have the favorable balance part here, we have additions, we have subtraction signs, and we have the balance as per the specific book. So now that we have starting point of the sum being the cash book, we will be mentioning here that the starting point of the cash book or the starting point of the specific sum is the cash book. As you can see, we have already mentioned there that the balance or the opening balance as per the cash book is always on the top side because the question demands for it. If the opening balance of the cash book is the starting point, that means the answer will be ending with the balance as per the pass book. Now, there are two columns which have been mentioned here, amount 1, amount 2. This specific amount will be referring to the transactions that needs to be mentioned, the numerical values. So any amount where no adjustment requires or no addition or subtraction requires will be mentioned on the external side, that is on this side. Any amount which needs addition or subtraction will be mentioned on the internal side, that is this specific side. So let's start with the sum. As we have mentioned that the favorable balance as per the cash book is 35,000. As we have mentioned that the favorable balance as per the cash book is 35,750, let's go ahead and put that transaction. This transaction has been mentioned here as this specific transaction requires no addition or subtraction. Hence, when we talk about the favorable balance or the opening balance or maybe unfavorable balance, it goes here. Now let's go on to the transaction. So the first transaction what we read is bank charges which has been debited to the account rupees 250. Now, as we defined earlier in the time gap category and the errors committed by the human, bank charges is something which has been already mentioned in the passbook. That means this specific transaction will be first recorded in the passbook and not in the cash book. So any effect has to be shown in the cash book later on. However, the effect has to be shown in the passbook at the first instance. So let's go ahead and see which side it will be reflecting on. Now, to make you understand, this specific transaction is a debit transaction as there is a bank charge. It is no income, it is an expense as an owner. That means this amount will be subtracted from the bank balance, or probably the balance that we have will get lowered because of this specific amount. So yes, on which side will it be coming on? You are correct. It will be on the subtraction side. Now that we are talking about the subtraction side, let's decide whether this book refers to the correct book or the wrong book. The specific transaction refers to the bank passbook, which is a wrong book as the favorable balance is as per the cash book. Hence, as per the described formula earlier, we need to understand that if this transaction is related to a wrong book, we'll be doing the transactions opposite to it. Now, when we talk about bank transaction or bank charges, the specific charge or the specific transaction has been already mentioned in the passbook. So we don't need to update anything in the passbook. Now let's go ahead and understand whether this transaction needs to be shown in the cash book. So as we need to show this transaction in the cash book, this cash book transaction will be lowering the balance. Hence, let's go ahead and see which kind of formula is supposed to be mentioned here. As this transaction reduces the balance, that means it will be recorded on the negative side of the cash book, that is the subtraction side of the cash book. Hence, as this refers to the correct book, hence we'll be subtracting this specific transaction. So now we'll be mentioning that this specific transaction goes on the subtraction side in the format. So let's mention this transaction there. The next transaction refers to check deposited but not collected rupees 7,550. Now when we talk about check deposited, the first transaction goes in the cash book and not in the passbook. So the transaction has been already mentioned in the cash book, the effect needs to be shown in the passbook. If the check has been deposited, that means this specific transaction should be shown on the debit side or on the credit side of the cash book. Which one will it be? Yes, you're correct. It will be on the credit side of the passbook. So, this specific transaction will be adding up to the balance of the passbook. But as the passbook is incorrect, that's the reason every addition transaction, if it refers to an unfavorable book, will be subtracted. Hence, the formula will be so this specific formula will be used. Now this transaction should have been mentioned on the passbook side as this transaction is mentioned on the credit side of the passbook, and if this book is wrong, that means we'll be subtracting this transaction. So let's go ahead and put it on the subtraction side. Now the next transaction what we'll be dealing with is bill dishonored rupees 3,500. A bill which has been dishonored will be already entered in the specifications of the passbook as the transaction has been already mentioned and is coming from the bank. Hence, the bill which has been dishonored will be already mentioned in the passbook. So the passbook balance has been already lowered by that amount as the amount got dishonored. The same transaction will be recorded in the passbook. Hence, as once this transaction has been mentioned in the passbook, this transaction now needs to update it in the cash book. In the cash book, if this specific transaction is subtracting the amount and if the cash book refers to the correct book or the favorable book, that means we'll be following the same transaction. For example, if this was supposed to be subtracted, if this refers to the correct book, we'll be subtracting it again. Hence, this specific amount will be going on the subtraction side of the format. So let's put this transaction on the subtraction side of the format. So now that we have all the transactions mentioned here, let's just total the transactions and find out what is the balance that comes as per the transactions or as per the passbook. So the total of subtraction side comes to 11,300. As per the favorable balance, we have favorable balance as per cash book, which says 35,750, of which we'll be subtracting a total of 11,300 here. So the balance as per the passbook will be 24,450. So if the opening balance as per the cash book is 35,750, the closing balance as per the passbook will be 24,450. So this is the end of the sum, or this is the end of the transaction as per the favorable balance. The next transaction or the next problem that we'll be solving through is an unfavorable transaction, or what happens when there is an overdraft balance. Let's go through that. So the transaction that we learned in the previous one was the favorable balance as per the cash book. Now what we'll be learning is overdraft balance, how to deal with transactions as per the overdraft balance. We have a specific sum mentioned here. Let's go through that first. We have an overdraft balance as per cash book, which is 6,500. That means the balance is already negative. Now what are the transactions that we need to deal with? Let's go ahead and read through those transactions. Check deposited but not cleared rupees 3,500. That is one transaction whereby the check has been deposited but it is not cleared. A check has been issued for rupees 1,000, which shows no reflection in the passbook. So we need to understand how to deal with this kind of specific sum. Bank interest rupees 200 and bank charges rupees 400 are the two additional transactions which have been mentioned here. So the first point that we'll be needing is we need to understand which book is correct and which book is incorrect. As per the specifications mentioned in the sum, we have overdraft balance as per cash book, which is 6,500. So cash book seems to be incorrect, whereas the passbook seems to be correct. So as mentioned here, cash book is incorrect and passbook is correct. Let's put the addition and subtraction signs here so that we'll be able to solve these transactions. Now that there is an overdraft balance as per the cash book, that means we'll be mentioning this amount in the external side. As I've mentioned a bracket here, that means the balance is already negative. So it is already in minus side. The next transaction what we'll be dealing with is the first transaction. Check deposited but not cleared rupees 3,500. So if there is a check which has been deposited, and we need to understand which transaction now this refers to. Now if the check has been deposited, that means the cash book has been already affected. We have already affected this specific transaction in the cash book. Now we need to understand whether what side will this take on the passbook. So if you see that if a check has been deposited, it shows on the debit side of the cash book and it shows on the credit side of the passbook. So if the passbook has to be debited or credited will be decided as per the transaction in the cash book. For this specific transaction, we have cash book being debited and passbook being credited. So if the cash book has been already transaction made, we need to understand in passbook how the transaction will take place. As this specific transaction has to be recorded in the cash book and the passbook both. However, the cash book has been already recorded, so let's understand how this transaction will be mentioned in the passbook. So 3,500, which was deposited but not cleared, this would have raised the balance of the passbook. It should have been added. As it refers to the correct book, we'll be adding up this transaction. So 3,500 will be added or subtracted. That's what we need to understand. That's what we need to check. As we know that this specific transaction has no effect in the passbook yet. That means the passbook shows no balance or the passbook shows no query. That means, however, this transaction has been already mentioned in the cash book. So let's go and see what is the effect of this specific transaction. It has been already added in the cash book. That means added, we have to see this specific book or this specific transaction refers to the correct book or to the wrong book. Yes, that is correct. This specific transaction refers to the wrong book. So as per the formula, if any transaction which we have to add or subtract refers to the wrong book, we'll be doing the exact opposite of it. So if we have to add this transaction and if it refers to the wrong book, we'll be subtracting this transaction. So let's go ahead and mention this transaction on the subtraction side. The next transaction, check issued rupees 1000. Similar case, we have issued the check and we have a record in the cash book. However, the same transaction hasn't been recorded in the passbook, so we need not see the passbook at all. In cash book, this transaction was on the subtraction side, as the cash book refers to the wrong balance or the favorable balance or unfavorable balance. We'll be going through the same scenario here. We had to subtract this transaction. As it refers to the wrong book, we'll be adding this transaction. So let's put this transaction on the addition side. Now we have bank interest. The next transaction which refers to is completely in terms with passbook. We have no updation of this specific transaction in the cash book. So bank interest has been charged to us. This specific charge will reduce the balance, as this specific transaction will be reducing the balance, and if it refers to the correct book, we'll be subtracting this specific transaction again. Other charges, which says bank charges or bank interest rupees 400. Now this specific transaction of rupees 400 again refers to a debit on the passbook. That means this will lower the bank account transactions and it has no reflection in the cash book. So once we talk about bank charges or bank interest which has been debited onto the bank account, this will be reducing the balance. However, the passbook transactions are always favorable as per this question, so we'll be following the same format. We had to subtract this transaction. As this transaction refers to the correct book, we'll be subtracting this transaction. So let's put this transaction on the subtraction side. So as you can see that we have totaled the amount, we have found out that there's an overdraft balance of 9,600 here. The total of 5,500 which has been mentioned as a total of 6,500 minus positive balance of 1,000 which gives you 5,500, and the total of 4,100 in subtraction which gives you a sum of 9,600, which is the overdraft balance as per the passbook. So as we have mentioned earlier, if the starting point of the sum refers to an overdraft, the end point of the sum will also be an overdraft. So this is how you prepare a bank reconciliation statement when you have two kind of sums, which is favorable balance and unfavorable balance, be it the cash book or the passbook. So this is how you prepare a bank reconciliation statement in any of the scenarios. Thank you for watching this video. Stay tuned with Ekeeda. Keep subscribing to Ekeeda.